Go interactive with X-Ray, where we bring trading experts to you live in the platform. Choose sessions, watch live market analysis, and catch up on your favorite market insights anytime. Ask questions and go one-to-one with leading experts on gold, oil, FX, crypto, indices, and equities. X-Ray, your very own analysis team, right at your fingertips. That's higher trading from MarketsX. Discover how some of the top executives are trading their own companies with our Insider Trades tool. See who's been buying or selling stock and what their trades say about insider sentiment. Use this unique big data tool to make more informed stock trades. That's higher trading from MarketsX.
What's happening, people? Good day, good morning, good afternoon, everyone. How are you guys doing? Let me know how you're doing in the comments box below. Today, I want to talk to you about the top 5 reasons why traders lose money in 2021. For the ones of you that don't know me, my name is Andrew, and for the last 10 years, I've worked in many retail and institutional Forex brokerages in Europe. Join me in this fantastic journey and find out the secret corners of Forex trading from top industry specialists. Learn what most Forex brokers don't want you to know by watching our daily broadcast, guys. And if you like what you see, like, share, subscribe on our YouTube channel, and support us in delivering more great content. I'll give you exactly 30 seconds to click that subscribe button down below, and then we get started. Go on, don't be haters, smash that subscribe button. 5 reasons why traders lose money in 2021. Coming up. Right, guys, and we're back with the 5 reasons why traders lose money in 2021. Very important to know. Let's start with number 1, guys. They get scammed. This is the main reason why traders lose money in 2021, guys. Are you surprised? Don't be. Over 50% of the traders, of the people that actually want to start their journey in the financial markets, they don't start it the right way. They get scammed, guys. That's why they start losing money in the financial markets. That's why they don't want to approach the financial markets after having a bad experience. They think everyone is the same. They think everyone is bad. So this is the number 1 reason, guys. Over 50% of the Forex traders, of the beginner Forex traders, unfortunately get scammed when they start their journey in the financial markets, purely because they don't know what questions to ask, how to look for an operating license for the company. They don't know the difference between operating licenses. They believe everything they hear on the phone from a complete stranger within the first 5 minutes, and they pull their card out and deposit. That's one of the reasons, and top 1 reason why traders lose money in 2021. Let's move on to the next one, guys, which is as important as the first one. The second reason is they don't really have any real knowledge about trading. You might contradict me. You might say, no, my neighbor taught me, my good friends taught me, my mentor taught me. Let me disappoint you guys. If your good friend, your mentor, never worked in the financial markets, he can never teach you what's happening behind the scenes and what are the things you should be afraid of or you should take action on. Okay, this is the second reason. You don't have real knowledge about trading. You never took the time of day to sit down and learn for a few days from someone that worked in the industry. I'm going to ask you one question. Let's say you have a medical condition and you're going to a hospital. Who are you going to talk to? Are you going to talk to a doctor that studied for years? Or are you going to talk to a patient in the hospital that has a similar condition to yours? Who are you going to believe, the doctor or the patient? This is exactly the same thing when you're dealing with so-called trading mentors, or friends or buddies or work colleagues that claim they can teach you how financial markets really work if they never worked a single day in the financial markets. This is it. Number 3, guys. Let's move on to number 3. Number three, why traders lose money in 2021. They don't understand how leverage works, guys. Leverage is that tool that makes the difference between the stock market and the CFDs market. When you're trading online, once again, you are not trading physical stocks or physical assets. You don't own the assets. You're trading them as contracts for difference. Now, the leverage, is the best tool you can use in your favor when you're trading CFDs, when you're trading online. That's why the CFDs market became so popular in the last 10 years, because people get to use the leverage, because trading is now available to the average person with only an investment of $500 to $1,000, and they can open a position that's really worth on the market $10,000. $50,000, $20,000. This is done through the use of leverage. In a very short sentence, what does a leverage of 1 to 400 actually mean? That means you have to invest as collateral 400 times less than you would invest on the market without any leverage. Now, why is leverage dangerous, you might ask? Because you're only investing 10%, guys. You're only investing 3% or 4% from the overall trade that you want to open. The rest is covered by the brokerage. Okay, so this is what leverage is. Now, think about it this way. If you only have 3% in your account and the market moves against you 1% or 2%, are you going to get wiped out? Most probably, yes. You're going to get into a margin call, and then you get into a stop loss or stop out, and that's it. That's the danger of using the leverage. You need to understand both sides of the coin. So this is the third reason why traders lose money in 2021, guys. They don't understand how leverage works. Let's move on to the fourth one and see what is the fourth one. There we go. Number 4, guys. The fourth reason why traders lose money in 2021 is because they don't know the correlations, the asset correlations, or the asset classes. Basically, they don't know much about trading. All they know is that Bitcoin is $30,000 today, and if they invest $500 or $1,000 or $5,000, they might make $50,000 by tomorrow. That is wrong. That is completely wrong. That's not how it works. And the probability of you losing your investment in no time, if you think like that, is 99 to 100%. So you don't know the correlations in the financial markets. What does that mean? I know you have a lot of assets you can trade on, but believe it or not, most of the assets are correlated together. I'll give you an example. USD JPY, USD CAD, and USD CHF. What do they have in common? They have the US dollar in the left-hand side, right? Now, what is the correlation between the US dollar and gold? Right? Most times it's an inverse correlation. It's a negative correlation. So when you're trading, you're going to see a lot of beginner traders opening one single trade. Okay, let's say USD JPY, and that's it. But my question to you is, if the dollar is weakening versus the Japanese yen, isn't it weakening against all its other peers? Because there is something that triggered that downward movement, that weakness in the US dollar. And very likely it's going to be something that happened on the US side of things that triggers that weakness in the US dollar. So if that's the case, then very likely the US dollar will weaken against all its other peers. Now, if you know that the US dollar and gold have a negative correlation, what stops you from opening a tiny position on gold as well? So you spread your investment across multiple trades, multiple assets, and you're increasing the chances of being successful. If you got that trade right, guys, you're not going to have 1, but 4 trades going into profit. You're going to have 3 trades on the US dollar and 1 trade on gold. That's if you get the direction right. And now let's move on to the fifth thing, why traders lose money in Forex trading in 2021, guys. They expose the entire trading account on one single trade because that's what they're being taught by their so-called account manager or friend that learned how to trade on a laptop, in the backyard somewhere. Don't expose your entire trading account on one trade, guys. This is the biggest mistake you can do, and you're going to blow up your account in no time. Your balance, your account is there to last for a long time. The less you use from it when you're exposing money to the markets, okay, the lower the chances of you getting wiped out would be. Okay, this is it. These are the top 5 things that generate massive losses. That's why traders lose money in 2021. Obviously, there's much more to this, guys, but we don't have time to cover everything. So if you want to find out more, feel free to contact us, guys. InstructFX.com, info@instructfx.com, or my direct email, thechartwhisper@gmail.com. We do provide free...
Keep your finger on the market pulse with the News Alerts tool. Stay up to date on the latest sentiment across all the major asset classes. Uncover bullish or bearish signals tied to specific assets that could be developing before major price moves, and track how news sentiment correlated with price in the past. Track the news volume on an asset, its fear index, and get a better feel for its underlying strength. All with News Alerts, your central hub for market information. That's higher trading from MarketsX.
What's happening, beautiful people? Sorry, guys, I got distracted. What's happening, guys? Good morning, America. Good afternoon, Europe, and welcome everyone to our live stream. How are you guys doing this afternoon? Let me know how you're doing in the comments box below. And if you have any questions about trading, guys, feel free to type your questions and I'll do my best to get back to you as soon as possible. Meanwhile, please feel free to like, share, subscribe, and support us in delivering more great content. It does help us a lot, guys. Come on. Smash that subscribe button. It doesn't bite, and it helps us big time. Be supportive. Don't be haters. Now, let's get down to business, everyone, and see what is happening in the markets on this beautiful Wednesday, 10th of March, 2021. The economic calendar today opened with data from China coming out in the green all over the board, with the consumer price index showing an impressive 0.6% growth. The producer price index exceeding consensus expectations by 2 basis points. And the new loans for February coming out at an impressive 1.36 billion, helping the Chinese markets recover about 1%, but still miles away from the massive 14% drop that happened last week. In other news, the US Treasury gets ready for the big bond sale auction of $38 billion of 10 and 30-year notes that will start today at 2000 hours GMT plus 2. Coinbase, one of the most long-standing crypto exchanges in the industry, hits pre-IPO valuation of $100 billion in a private auction. The Bank of Canada will announce its interest rate decision today, 30 minutes into the US trading session, with a 0.25% rate expected to remain unchanged, at least for the time being. Crude oil stalls today ahead of the crude oil inventories, trading at $64.40, with little movement noted on the European trading session. Soybean price under big pressure after Brazil, the world's number 2 producer, announced a record crop this year. And Bitcoin, guys, tops $55,000 on correction, but encounters some resistance around the 78% Fibonacci retracement level. Ethereum stalls. US markets open. Coming up.
Discover how some of the top executives are trading their own companies with our Insider Trades tool. See who's been buying or selling stock and what their trades say about insider sentiment. Use this unique big data tool to make more informed stock trades. That's higher trading from MarketsX.
Right, big welcome everyone. Once again, we are exactly 15 minutes ahead of the US markets open in this beautiful Wednesday, 10th of March, 2021. Quick look at the economic calendar to see what happened today in the markets, guys, and then we're going to have a look at a couple of interesting articles just ahead of the US markets open. Shortly after the US markets open, we're going to look at the charts of the day, the signals of the day, and who knows, I might have a surprise for you, so stay tuned. We started nice and early this morning with announcements from China, guys, coming out in green all over the board. We see a 0.6% versus a 0.4% expected by consensus on the CPI. We see 1.7% on the producer price index, and the new loans, as I mentioned a few minutes ago, came out at $1.36 billion, way above consensus expectations. A few minutes ago, we had the core CPI month to month and year over year from Canada. 1.3% came out versus an expectation of 1.4%, and 0.1% versus 0.2% expected by consensus. We also had the consumer price index announced in the same time on the US dollar, which came out 0.4%, just like consensus was expecting. In 44 minutes from now, we're going to have a rate statement and the Bank of Canada will announce its interest rate decision, which is expected to remain unchanged at 0.25%, at least for the time being. 5:30 in exactly 1 hour from now, we're going to have crude oil inventories, guys, and Cushing crude oil inventories, followed by a 10-year note bond auction and the federal budget balance, which will be announced at 2100 hours GMT plus 2. Now, I have a couple of very, very interesting news I want to share with you today, guys. One is about soybeans. The other one is about cryptocurrencies. And the third one is about the opening bell, which will happen in 14 minutes from now. So I'm going to start with the first one, which is big. Coinbase, guys, reportedly hits pre-IPO valuation of $100 billion in private auction. Now, the major exchange is inching even closer to the IPO. We see the Bitcoin and the cryptocurrency exchange Coinbase could be headed for an IPO valuation of $100 billion after shares repeatedly sold for up to $375 each in a private auction. Shares in Coinbase Global reportedly traded for a price between $350 and $375 per unit on the NASDAQ private auction market last week, giving the company a pre-IPO valuation of anywhere between $90 and $100 billion, according to a report by Bloomberg. Trading reportedly ended with the share price at $350. Now, for the ones of you that don't know what Coinbase is, guys, it's one of the biggest and long-lasting cryptocurrency exchanges in the business. It currently processes the second most traded volume among centralized exchanges and was recently revealed to store coins with a value equal to 100% of the total crypto market capitalization for its customers. Coinbase launched in 2012, guys. It's been around for 9 years now. Now, Bloomberg, which claimed to have received the latest share price from an anonymous source, noted that the pre-IPO market activity is not always an accurate representation of how the stock will trade when it goes live. Restrictive trade volumes in private markets don't accurately convey live open market conditions. True, however, the news remains, guys. Big news, guys. Big news. Coinbase is heading towards a pre-IPO valuation of $100 billion in a private auction. Now, the second very interesting article, guys, it's regarding commodities. And I know many people trade oil, trade gold, trade various commodities, natural gas, for example. But let's not forget the soft commodities, guys. That sometimes they can provide huge returns if approached at the right time. So the news is this: soybeans record Brazil crop could jolt 7-year price highs. Deep within the confines of some of South America's most fertile lands, a treat might be growing to the rally in the US soybeans. Brazil, Rio Grande do Sul, Santa Catarina, and Paraná provinces, which together grow almost 35% of the soybeans from the world's number 2 producers, are to unleash a record crop this year. This is the soybean price, guys. You can also see it. Bear with me for just a second. I have to log in. I love the safety feature of the trading platform at markets.com. It kicks you out after a few minutes of inactivity. But there we go. Not a problem. I logged in less than 20 seconds, and now I can show you the soybean price. Where are we? There we are. Okay, there is the platform. So we see soybean currently trading at $1,417.88 on markets.com. We saw a retest of that 200 moving average to the downside. Okay, we see the RSI at the bottom. So from here on, okay, we might see an incredible pullback, guys, as the markets might be oversupplied. Following the news, if the candlestick formation manages to settle below the 200% moving average, guys, then you might want to get ready for a potential sell and fill in your orders as soon as that movement starts. Okay, this is the news about soybean. Let's have a quick look at. Oh my God, let me sniper these pop-ups. Right, so agricultural sector analysts who have been crunching numbers from the provinces over the past few weeks say that when volumes from the three region reach the market, they could take some hit off soy futures, which are trading at their highest in nearly 7 years on the Chicago Board of Trade. While Chicago Board of Trade soybean futures hit mid 2014 highs of nearly $14.60 per bushel on Tuesday, then quickly came off those highs on concerns about Brazilian production, noted Jack Scottville, who oversees crop research for the Price Futures Group in Chicago. So very, very interesting news, guys. Keep an eye on soft commodities. Yeah, if you go on markets.com, if you want to use their trading platform, at least as informative. Yeah, under commodities, you're going to have primary metals, energy, and softs. So under soft commodities, you're going to have cocoa, coffee, corn, cotton, rice, soybean, sugar, and wheat. Okay, and probably they will add some more as soon as they get the chance. Now, the other news I wanted to talk to you about, guys, is regarding the markets open today. Okay, let's see what's going to happen with the U.S. markets. We're exactly 9 minutes ahead of the U.S. markets open this afternoon. So the futures on the Dow, S&P, and NASDAQ, and Russell 2000, the small cap, the tiny Russell 2000, as well as the European shares, oscillated ahead of the U.S. trading session today as investors search for direction. The move comes after yesterday's massive rally in U.S. stocks, which saw significant gains in megatech shares, including Tesla, Amazon, and Microsoft. Gold also posted a substantial boost, while oil remained flat ahead of the crude oil inventories, which will be announced in 40 minutes to 1 hour from now. In Europe this morning, we saw the Stoxx 600 index struggling to move higher at the open. The index was held back by fears inflation will slow a recovery, denting mining and travel stocks, two sectors dependent on reopening economies for growth. However, telecom and real estate shares helped the pan-European push modestly higher. Slowing Chinese demand for base metals also weighed on the European markets as the world's second largest economy slowed in the first 2 months of the year. The producer price index climbed 1.7% year over year, beating the median 1.5% forecast, reflecting inflation fears. However, those worries have yet to reach the Chinese consumer, as the consumer price index actually fell 0.2% year over year. Now, let's have a quick look and see top 5 things to know in the markets today, guys. I'm not going to go deep into it. I'm just going to read you the titles and a first sentence if there's something notable. And then we're going to move on to the charts of the day and the signals of the day, guys, as we're getting really, really close to the U.S. markets open. So what's happening today? Why are investors very, very cautious? Okay, number one on the board, the U.S. Treasury prepares for a massive bond sale. Inflation data for February, which came out already, gave us some indication as to whether the great inflation scare to 2021 needs to be taken more seriously. The consumer price index is expected to have risen 0.4% in the month, while the annual rate is expected to have risen to 1.7% from a 1.4%. The core CPI, which strips out more volatile elements such as food and energy, is expected to have risen 0.2%, with the annual rate staying at 1.4%. Now, the numbers are sure to gain attention coming ahead of the Treasury's auction of $38 billion of 10-year notes at 1800 hours GMT or 2000 hours GMT plus 2, which is set to be more of a challenge than the 3-year note sale yesterday. Also of note will be the weekly data on mortgage refinancings, which are likely to have suffered from the rise in long-term rates in recent weeks. Number 2 on the board, Chinese markets bounce weekly loan data stronger than expected. We went through it, guys. I'm not going to go through it again. Tech underperformance set to return with Oracle earnings due, which is number 3 on the board. The U.S. stock markets seem set to open mostly higher again. Although the recent trend of tech underperformance appears to be resetting itself. The Dow Jones futures were up 103 points or 0.3%. The S&P 500 was up 0.1%, and the mighty Nasdaq 100 was down 0.2% today pre-U.S. markets open. That follows a whooping 3.7% gain in the Nasdaq yesterday, as battered tech names suddenly found a bid from bargain hunters. Stocks likely to be in focus later include GameStop, which rose another 25% on Monday as news about its online sales push re-intensified on ongoing short squeeze in the stock. GameStop was up 11%. Also of interest will be whether names such as Tesla, which added $100 billion to its valuation yesterday with a 20% rise, can sustain its refound momentum. Software giant Oracle reports its earnings after the market closed today, guys. So once again, stock traders, pay close attention. If you're wanting to position yourselves on the market to trade stocks, to trade companies that will announce their numbers after the market close, you have to position yourself on the markets today, okay, before the markets close. And tomorrow, guys, at the US markets open, you're gonna see the result. Either the markets will open with a gap, okay, in your favor, taking your trade from wherever you left it today into a bit of profit, or they might open against you with a tiny gap. But don't be scared. Even if you are riding the stock, okay, on a short position, the company's interest is to push the share price as high as possible. So sooner or later, the share price will go back up, guys, unless something really bad happens with the company. But talking about a big company as Oracle, okay, that's unlikely to happen. Right, number 4 on the board, another interesting news. Roblox to debut after setting $45 reference price. The game platform Roblox is set to make its debut on the New York Stock Exchange later today after setting the reference price for its direct listing at $45 a share. The price values the company at around $30 billion. The company, which has experienced a surge in daily average users and average playing times due to the pandemic, has opted against a traditional IPO, preferring the direct listing route taken by the likes of Palantir and Spotify. For the 9 months through September, it still had a consolidated net loss of $197 million on revenue of $614 million. Its debut comes as Epic Games, the publisher of Fortnite, whose revenue model is similar to Roblox, widened its antitrust attack on Apple and Google with a lawsuit in Australia. And number 5 on the board, guys, oil consolidates EIA inventories today with crude oil prices consolidating after absorbing the shock of another big build in US crude inventories last week and shrugging at the news that Iraq, the second biggest oil producer in the Organization of Petroleum Exporting Countries, produced above its agreed quota in February. Now, the focus of the day is likely to be on the government's inventories data after the American Petroleum Institute weekly estimates showed a 12.8 million barrel surge in crude stocks, the biggest weekly rise since last April. API data for the last 2 weeks together appear to map closely to the 21 million barrel increase registered last week by the Energy Information Administration. As such, any overshoot of the 816,000 barrel increase expected may be received negatively. So keep an eye on crude oil, guys. Keep an eye on the news and see what the numbers will come out to. Now, I'll make you a deal. Please allow me less than 30 seconds to catch my breath. And then we're coming back live with the charts of the day and the signals of the day, guys. We're exactly 1 minute ahead of the US markets open today. Let's ring the bell together in exactly 30 seconds from now.
Keep your finger on the market pulse with the News Alerts tool. Stay up to date on the latest sentiment across all the major asset classes. Uncover bullish or bearish signals tied to specific assets that could be developing before major price moves, and track how news sentiment correlated with price in the past. Track the news volume on an asset, its fear index, and get a better feel for its underlying strength. All with News Alerts, your central hub for market information. That's higher trading from MarketsX.
Right, and we are back, guys. Less than 1 minute ahead of the US markets open today, guys. I'm going to start with crude oil WTI on a 60-minute chart, which even though tried to push a bit higher on the European trading session today, we see this red candlestick that started recently, possibly retesting that 200 moving average to the downside. We're looking at $63.77 as we speak, with the RSI stochastic both pointing downwards ahead of the US crude oil inventories. Now we're moving on to the euro US dollar, guys, which tried to push a bit higher today, but it did not manage. It moved mostly sideways, and it started picking up a couple of hours ago, pushing the European currency at 190.20 versus the US dollar. Once again, with the RSI and the stochastic somewhere high in the overbought levels, okay, indicating a potential correction. Let's not forget the 200 moving average many times works as a magnet for the price. So don't be surprised if you're going to see a retest to the upside at 119.70 shortly after the US markets open. Moving on, we're looking at the pound, guys. We're looking at the cable, which done tremendously well in the past few months. We saw a bit of a pullback that started on the 25th of February, okay, a couple of weeks ago. And now we are all curious to see where will the price go from here. 139.27 this afternoon with the RSI and the stochastic pointing upwards. We see the candlestick formations settling above the 200 moving average, which usually indicates quite a bit of buying power, okay, and a potential uptrend. The next thing we're going to have to see is the this high basically matching, or exceeding the previous high, which was at 140.12. Okay, we are very close to that level. We are about 90 basis points away from it. That might happen in 30 minutes or so with a bit of a push. Now, it is official, guys. Welcome to the US markets open. The markets opened a minute ago. We're going to get to the S&P 500 and the Dow Jones in a few seconds, and we see the direction the markets open today. 108.42 for USD JPY this afternoon, guys, which has been ranging in the last 3 trading sessions. We see the 20 and the 50 moving averages pointing downwards somehow on a 60-minute chart. We see that 200 moving average at 107.78. We might see a retest, guys. If this important support level is broken to the downside, then apparently it is. Let me go on a 5-minute chart. No, it's not. Okay, the market's only opened, guys. We're gonna have we're gonna need a bit of time to see what's going to happen. As we look at the markets, they open to the upside for the USD JPY. Let's see when that candlestick closes. Meanwhile, we're moving on to the Aussie dollar, guys. 0.7732 for the Aussie dollar this afternoon, with a retest to the upside of that 200 moving average, with the RSI stochastic still pointing upwards. A lot of volatility is happening as we speak up there. Yeah, it's 0.7732 and 0.7736 where the 200 MA is. We see a lot of selling pressure right now. Sellers seem to be pushing the price downwards, but once this candlestick closes, it's going to give us a better direction of the market. If the Aussie dollar will go for 100% correction, guys, towards the 0.7837, yeah, or who knows, maybe even higher, 0.80. Let's see what's going to happen. We're going to look at signals of the day in just a minute. 126.28 as we speak for the USD CAD pair. Okay, buyers are coming into places as we speak, pushing the price a bit higher. RSI stochastic both turning around at the bottom, indicating a potential uptrend. As you see, we're looking at the ranging market for USD CAD for quite some time now, so you can mark the average highs and the average lows, guys, and you can still trade somewhere in between if you know what you're doing, if you get a bit of a sense of direction from the market. 126.28 with the RSI stochastic pointing downwards. Okay, let's see what's going to happen. The markets need a bit of time to settle. Meanwhile, we're looking at the S&P 500, which, funny enough, opened to the upside today, guys. There's the gap, $3,901.23 for the S&P 500 at the markets open today. And the Dow Jones, guys, opened on a positive note as well. Look at that amazing green engulfing candlestick that we see there, pushing the value of the Dow Jones Industrial Average all the way up to 32,081.99. We should see it trading a bit higher today, guys. We should see it trading a bit higher. Let's see what's going to happen. Right, moving on, we're looking at Apple, which opened to the downside, $120.99 for Apple this afternoon, with the RSI and the stochastic apparently turning around and pointing downwards. We're looking at Amazon, guys, which Let's have a quick look on a 5-minute chart. Opened on a positive note. We see it pushing higher at 3,086 and 17 cents. Okay, with the RSI stochastic pointing upwards. Let's see. We might see a retest of that 200 MA to the upside on a 1-hour chart. Moving on, we're looking at NVIDIA, which opened on a positive note, $507, $508.44 as we speak for NVIDIA. What's a bit worrying is that dead cross that we see there, between the 50 and the 200 MA, which usually implies a bit of selling power. Let's see if this downward movement for NVIDIA will continue. Meanwhile, we're going to have a look at the US dollar index, guys. 91.88 for the US dollar index this afternoon with... let's have a quick look at it on a 5-minute chart. Right. I can't tell if it opened to the upside or to the downside. The markets have not decided yet where they want to go. Let's allow it a bit more time, okay, to see what's going to happen. Gold, again, a retest of that 200 moving average. Finally, we're seeing gold this week trading again in the 1700s, $1,713.95, $1,714 as we speak. We saw the price bouncing off that 200 moving average to the downside. RSI stochastic a bit undecided, with the RSI pointing downwards, but still indicating a bit of an uptrend. That's if the candlestick formations will settle above the 200 moving average. Okay, we can try something else. We can try having a look at it on a 4-hour chart. Okay, on a 4-hour chart, obviously that 200 MA that we saw earlier on will turn into the 50 MA. Okay, and we see this retest and this pressure, tremendous pressure around this price. Big rejection for this green candlestick from the 50 moving average. Let's see what's going to happen. Probably we're going to have some trading signals in just a minute. Meanwhile, let's have a quick look at Tesla, guys, which opened. Did it open? Right, it opened higher, $703, $702.55. Now, careful, guys. Whenever you see gaps like this on the markets, expect a bit of a pullback sooner or later. For the gap to be filled. There's no price action at this at this level. So the candlesticks will probably pull back at some point to fill in the gap. And this is what I'm talking about. Have a quick look. This was the opening. The green candlestick, and now we're seeing a red candlestick probably moving down. There we go. To around $675.64, where that 20 moving average is and where that gap was created. There we go. So stock traders, lesson to learn today. Every time, almost every single time the markets open with a big gap to the upside or to the downside, very soon after that you might see that gap filled. That's when the big boys come into play, as far as I know. Quick look at Facebook, guys, which opens. I don't even know how it opened. It opened to the... Let's have a quick look. Open to the upside at some point. Red candlestick as things stand right now. $266.47 for Facebook. We're looking at Alibaba, which has a very similar trajectory to Facebook's. The good news is, you see, guys, the candlesticks are settling above the 200 moving average. However, we see a big gap left here. Between 227 and 233. The current price is 239. Let's see what's going to happen. We might see a bit of a pullback. Let's see. Meanwhile, Bitcoin, guys, everyone's favorite. It's pushing even higher. When I wrote the article half an hour ago, Bitcoin was trading at $55,000. Now it's currently trading at $56,247 after breaking through the 78% Fibonacci retracement level, which you're going to see here on the charts. There we go. And if you look carefully in the left-hand side, guys, at 55,084 is where that 78% retracement level was. And we can see the rally that happened in the last hour or so, shooting up over $1,000. Quick look at Ethereum, guys, which most probably is copying Bitcoin. Yes, we can see the teacup shape. We can see the correction that started. There we go. The same teacup shape that you see on the Bitcoin charts, with probably a bounce from the 78% retracement level. 1,837.30 for Ethereum this afternoon. And if technical analysis makes any sense, on cryptocurrencies, guys. Okay, then we're looking at I don't know what we're looking at. There's no indication, guys. The markets are only moving sideways, and I don't want to mislead anyone. Now, quick look at some trading signals shortly after the US markets open, guys. We see the euro and the pound in strong buy recommendations on 3 out of 4 time frames versus the US dollar. We're looking at USD JPY and USD CHF with 3 strong sell recommendations. With the daily remaining a strong buy, though. Aussie dollar versus the US dollar seems to be strengthening this afternoon, and the euro GBP strong sell indication on 3 of the 4 time frames. USD CAD strong sell, no doubt about it, based on the signals of investing.com. And as we go towards the bottom of the charts, guys, we see a bit of uncertainty there from the Kiwi dollar, which indicates a buy and a strong buy position versus the US dollar. We see a bit of uncertainty on the euro versus the JPY, which again indicates a strong buy on a 5-minute and a daily chart. Yeah, but there we go. Yeah, now the markets seem to be choosing a direction. Okay, we're looking at strong buy indications on all 4 time frames for the pound versus the Japanese yen, and GBP CHF again strong buy recommendations. Yeah, daily, hourly, and 15 minutes. But don't get carried away, guys. The situation might change any minute. Okay. Right. Okay. So USD JPY, USD CHF, strong sell indications. Euro USD and GBP USD strong buy indications after the US markets open. Quick look at commodities, guys. Let's see what analysts think about commodities today. Is there a direction for gold? No, it isn't. Okay. We have a strong sell on a daily. We have nothing on a 5 minutes. Yeah, 15 minutes and hourly mixed signals with strong buy recommendations. Silver, on the other hand, has 3 strong buy out of 4. Copper, 3 strong buy out of 4. And crude oil, WTI, and Brent oil, guys, surprisingly, 4 strong buy recommendations. Now, natural gas, mixed signals, and US wheat, yeah, the softy is trading downwards probably this afternoon, yeah, with 4 strong sell recommendations. Right, my session has expired. Right, 1 click and I'm back in. Let's have a quick look at wheat, guys. Again, if you want to trade soft commodities, if you want to look at energy, metals, or soft commodities, you can try markets.com, guys. They have an amazing trading platform. It's a web-based one, so you don't have to download it. Right, so let's have a quick look at wheat, see what's happening with wheat. The price moved below the 200 moving average, yeah, below the red line, indicating a bit of selling power. If we were to mark the average highs and the average lows, guys, you can see the direction is very, very likely to the downside. Yeah, this is a trend channel. This is how a trend channel looks like. We're looking at the RSI 14 not being able to go even halfway, yeah, even to the 50% mark. So whenever the RSI is trading below the 50% mark, guys, many times that is an indication of a downtrend. Now, careful what you're doing today. We're going to have crude oil inventories announced in 45 minutes from now. Okay, so have a quick look at crude oil. 15 minutes from now, USD CAD, guys. USD CAD under pressure with the Bank of Canada announcing its interest rate, which should be kept unchanged at 0.25% according to sources. This was it from my side today. Join me again tomorrow, same time, same place for a new round of market talks. If you like what you see, like, share, subscribe, and support us in delivering more great content. If you don't like what you see, annoy your enemies, annoy your neighbors, guys, and still share our videos. Much appreciated. Until tomorrow, remember to trade responsibly and may all your trades be in the money. Have a good one, guys.